Hi everyone, good afternoon or good evening or good morning, depending on what time you're watching this. Government bonds have been in the news quite a lot lately, and while it seems a bit of a boring subject, I thought it's probably best to touch on this now, just in case you would like to learn something a little bit more about them, because it's quite an interesting subject. And my main question for this video was, should you buy government bonds? Are they a good investment? Well, I've been investing for a fair few years now, since 2009, but more seriously over the past 5 or 6 years. And I have done a little bit of research into government bonds as well. Now we need to start at the start, right? What is a government bond? So let's have a little look at what I found on a great website called Investopedia. They're great if you just want to learn a little bit, kind of like key nuggets of information about different things. I was going to say, like, in Scotland, because I'm in Scotland right now, and it's absolutely freezing, and I've not put my heating on yet, hence the scarf. So, what do Investopedia say about government bonds? Well, let's learn here. So, a government bond represents debt that is issued by a government and sold to investors to support government spending. So, when governments need money, they issue bonds which investors purchase. And why would they purchase them? Well, the government issues periodic interest payments. It doesn't issue, the bonds will pay periodic interest payments. So, say you buy a bond for £1,000, you may get £5 a month every single month over the whole length of the bond, and then you get £1,000 at the end when the bond matures. So you've made £5,000 a month, £5 a month basically. But there'll be different interest rates depending on the different length of the bonds and depending on the time. So at the moment, what is happening is, because people think the UK government's a little bit riskier, is those interest rates on the bonds have gone up. So people are getting a better interest rate. They're maybe getting £6 or £7 a month per £1,000, rather than during safe periods of time, people might be getting less, sort of £2 or £3 per month, for example. Government bonds are considered low-risk investments because the government backs them, and the governments tend to not go bankrupt. But of course, this can happen. Places like Zimbabwe, places like Germany after the World War, Argentina, sometimes countries do default on their debts, and so while they're considered very, very safe, countries can still go bankrupt, like companies. And there are various different types of bonds that are offered by the US Treasury, and the same will apply in the UK. And of course, the US is deemed to be the safest economy in the world. The UK is not too bad either. I mean, any country is kind of meant to honour its debts, but of course there are more riskier countries out there. Because of their relatively low risk, government bonds typically pay low interest rates. So that's very interesting in this high inflation and high interest rate environment. So I wanted to show you this as well, because this is again from Investopedia, and I wanted to show you this. Fixed rate government bonds can have interest rate risk, which occurs when interest rates are rising, which is what's happening right now. And investors are holding paying fixed rate bonds. So what would you do if you had bought a government bond and it was paying 1.5%? And in a couple of my previous videos, I was showing you bank accounts that were paying a 5% interest rate. So if you're holding government bonds and they're paying 1.5%, or you've got the option of taking that money out, selling the bonds and putting the money into a 5% interest bank account, what are you going to do? You're always going to go for the 5% interest bank account, because it's paying you a much higher rate of interest. And to be fair, the banks are not going to go bankrupt either. If the banks go bankrupt, then we've got big problems. So this is what's happening right now. Also, only select bonds keep up with inflation, which is a measure of price increases throughout the economy. If a fixed rate government bond pays 2% for a year and prices in the economy rise by 1.5%, the investor is only earning 0.5% in real terms. So what that means is when inflation is high, if inflation is 10% and the bond is only paying 2%, you're losing 8% per year. So investors are always going to look for a place where they can potentially beat inflation. And places that are good for beating inflation are places like stocks, especially commodities and companies that are driving the inflation up. And certainly if inflation's high, interest rate rises, then bank accounts pay better interest as well. So investors might be willing to hold more money in cash, but park it in a place where the interest rate is the best. So are bonds worth the investment? Sorry, let me just get rid of that. Are bonds worth investment? In short, no, not in my opinion. Warren Buffett doesn't think so either. He's one of the top investors in the world. In fact, he is the top investor in the world right now, and he doesn't think bonds are very worthwhile at all. They are, you get your payback over a very long period of time, and you get no growth. It just is, you just get a regular payment every single month, and there's no growth. So that's not exactly great. So personally, I don't think it's great opportunity to buy bonds at all. And in fact, so there is an ETF that I follow on the UK stock market. It's called VGov. It's the Vanguard Gilt ETF. And you'll be able to see over the past year, so year to date, it's down 30%. So that's a combination of everything we've talked about on this video. That's high inflation rates driving investors out of bonds, a lack of confidence in the UK economy, thinking that potentially the government could at some point in the future default on these interest payments. And as the price goes down, the bond yields increase, investors get a better return for the money, but it's still way below what you could potentially get in a bank account. Now, of course, why do people buy bonds? Well, the 5% bank account I talked about in one of my previous videos, that is only available if you invest up to £5,000. Anything more than that, and you don't get anything, But there are many, many, many companies with large amounts of cash, and they need this cash to operate their business, but essentially it's large amounts of cash earning zero interest. So they need somewhere to put it, and that's where they will trade bonds, or they'll buy bonds to get the best interest rate they can, because putting £5,000 into 5% interest bank account doesn't do anything for them when they've got millions. So that's the whole purpose of government bonds, and that's why they're doing what they're doing. So, I hope you guys enjoyed that. I hope you learned something there. But I also wanted to do guess the stock. So it's time to guess the stock, guys. Here is your first clue. So the stock is at 236 pence. And that was at the point today. That was at the close today. You can see across the year it started round about 257, 258 at the start of the year. It's went all the way down to almost £2 and back up to £2.80, and we're sort of floating around the 236 mark. I've got some more clues for you. So the stock also, let me just make this a little bit bigger. So you can see that the market cap is 26 billion US dollars, which is about 24 billion pounds. The dividend yield is 5%. So it doesn't make it super easy, but feel free to pause the video and have a little think, do a little brainstorm, and see if you can guess the stock. All right, for those of you guys that did it, really well done. Congratulations. The stock is NatWest Group. So NatWest is the new name for RBS. NatWest has done okay. It's still got quite a large share of government owning the company. I think it's still about 47% owned by the government. The government is slowly unwinding that stake whenever it can. But NatWest has been doing pretty well this year, to be honest. It's down 6% year to date, but actually the majority of stocks are down. And if it's paid a 5% dividend, then that means it's actually only lost 1% this year, whereas a lot of stocks are down, 20 or 30%. So all in all, it's done okay. It's done okay. But there you go, guys. Hopefully you enjoyed that video and learned something about bonds. I look forward to catching you on the next video.